Welcome back to the MD Investor channel. It's been a while, I know, but we're back. The channel where we talk about personal finance, investing, debt. We're going to talk about real estate, just basically educating ourselves so we can break the cycle of generational poverty. So today we're going to talk about taxes. I know it's not a favorite subject, but it's actually a very important topic. Maybe not as exciting as, dividends or, credit cards or anything like that, but it's definitely very important. I read today that we pay more in taxes than we pay in housing, food, clothing, which when you think about that is huge. So we pay more in taxes than we do in food, clothing, and shelter. But yet we don't really talk about it, right? So I ask myself, why? Why don't we even talk about taxes? And I think the reason why we don't talk about taxes is because we think that what's the point? We can do nothing about it. You work, the taxes are taken out, and what options do you have? You do overtime, you do more work, they take out more taxes. So why are we even going to talk about it? I love this quote. It says, there are two tax systems in America. One for the informed and one for the uninformed. And both are legal. Let me say that again. There are two tax systems in America. One for the informed and one for the uninformed. And both are legal. And to me, what that says, well, let me give you credit. That's from Judge Learned Hand, a long time ago. Basically, what it says is that paying more than you should in taxes is your problem. Because there's other people who are doing it legally and paying less than you. So let me say that again. Paying more in taxes than you have to is your problem. Because there are people who are informed, who are educated, who are paying less in taxes. That's why Trump says, I pay no federal income taxes. Because I'm smart. Right? He said he pays less or pays no federal income taxes because he's smart. Probably pays no taxes, period. Because he knows what to do. He's informed. Okay, so let's just do a quick example. Most of us are used to being employed. We get paid as employed. And as an employee, as you already know, you work, you get your hours, and then you have taxes taken out by the government, right? Your FICA, your Medicare, your Social Security, your workers' comp, your state tax, all that stuff is taken out before you get your check. What's left over? The net you have to live on. We're used to that. But if you're a business owner, how do they get taxed? As a business owner, you get revenues. You do your business. You're providing services or product or whatever. You're getting your gross income or your revenues. Then you spend. Spend on what? You spend on things for your business. So the IRS phrased it as anything that is ordinary and necessary for your business can be a deduction. Anything that is ordinary and necessary for your business can be a deduction. So if you are, let's use the example of McDonald's. It's ordinary and necessary for McDonald's to purchase beef, chicken, potatoes for their fries, ketchup, sodas. That's all ordinary and necessary. So that cost of that can be deducted from their gross revenues. So can the electricity to run the restaurants, the water, the real estate taxes on the property, the insurance, anything that the salaries of the employee, the benefits of the employee, any professional services they may have, like the accountants and tax attorney. That's all deducted from the gross income or the revenue. What's left over, which is probably not gonna be a lot, it's gonna be a small amount. The business then pay tax on that. So you see the difference, right? W-2 employees, which we're used to, is we work, taxes are taken out, and we live off the remainder. Business earn, and then they spend on the business as long as it's ordinary and necessary, and then what is left over, they get taxed on, which is usually a small amount. I don't know if you guys remember Leona Hemsley, a famous hotelier here in New York, famously said, only poor people pay taxes. And when you hear that, you're like, what? How can you be so arrogant? How can she say that? But when you think about it, all of these three quotes we just mentioned, there's two tax systems in America, one for the informed and one for the uninformed. Both are legal. So they're saying you can pay more taxes if you're uninformed. That doesn't make you more patriotic. That just makes you ignorant. Trump said, I pay no taxes because I am smart. He's informed. And then she said only poor people pay taxes. And if I could elaborate a little, she's saying only people who have a W-2 job pay taxes, because people who are business owners will not pay taxes because of what I just said, right? They get all those tax deductions and therefore pay no taxes. Let's look at the tax code. So the tax code is about 2,600 pages. They said most of those pages are incentives. You know, if you do this, we will do that. Quick example. The U.S. government is trying to become more greener, correct? So we have an tax incentives for electric cars, for example. So you buy a electric car and they'll give you a tax deduction. Or you put solar panels on your roof and you get a tax deduction. What the government is trying to do, they're trying to change or mold or guide your behavior. They figure because we are rewarding you with these tax deductions, we should affect your behavior. Our problem is that we are not doing what the government is going to reward, right? They're going to reward starting a business and investing. But if you're not starting a business and you're not investing, they're not going to reward you. That's why Amazon pays no taxes. They're starting a business, they're creating jobs. That's why real estate investors pay no taxes, because they're creating homes. If all you're doing is working a W-2 job, they're like, well, you're not really stimulating the economy, so therefore we're not going to reward you, okay? So that's a key thing. What is the government incentivizing me to do? And do that, and you'll be rewarded with lower taxes. What's the difference between tax preparation and tax planning? Tax preparation and tax planning. So when you think about tax preparation, we think of getting our W-2 from our job, going down to H&R Block or Jackson Hewitt or whatever, and having them do our taxes. That's tax preparation. Basically, doing your taxes. For example, we'd say, okay, 2021 is over. We're going to pay our taxes now in April of 2022. 2021 is already over. It's done. So all you're doing, you're paying taxes on stuff that's already over. You can't change, you can't modify, it's already done. Tax preparation or tax strategizing is what the wealthy do. So for 2021, January of 2021, they were already talking to their CPA. Saying, how do we lower our taxable income? How do we, and that's where you're getting that advice. If you would buy a property, you would get this if you do this, and that's how they're able to lower their taxable income. Because really, it's not about what you make; it's about what they tax you on. It's how much you keep, right? It's how much you keep. So we talk about the incentives, right? You have to do what the government is incentivizing you to do. Okay. So this is where sometimes I'm not sure if you ever heard of things called opportunity zone, where the government's saying certain areas because either they're low income or they're whatever, we're going to give you incentives. So maybe you'll pay no taxes for 4 years, 5 years, and you see developers going in and building all these building. That's incentives, okay? And if they went somewhere else, they'd have to pay tax. But because they come into these opportunity zones, they'll pay no taxes. So they are following the incentive that the government is providing. So your behavior causes you to pay more taxes or less taxes. That's basically the bottom line. So when you see those people paying no tax, we get upset. The reason, you have to look at the reason. Why? That's a very powerful question. Why? Why are they paying no tax? They're paying no taxes because they have bought real estate, which is a great tax shelter. They pay no taxes because they're creating jobs. So the government said, you're doing these things for me, and I'm going to reward you with that. So you have to ask yourself, why am I paying all these taxes? Because you're not creating a job, right? You're not providing homes. Therefore, I'm not going to give you any tax deductions. So the fact you pay too much taxes or too little is because directly based on your actions. Okay, so I think I've done 2 videos before about how investors who get dividends pay a less or a lower amount of taxes at the long-term capital gains. Again, because they're saying that you are investing in these American companies, which is creating jobs, and because of that, we're going to charge you a lower tax rate on your dividends. 15, actually sometimes 0%, 15, no more than 20. So you're being incentivized to hold your stocks for longer than a year. Because if you hold it or you sell it before a year, then you'll be charged at a short-term capital gains, which is much higher. Again, the incentive, less than a year or greater than a year. And the reason why people hold it more than a year, for a lower tax rate. Again, your behavior is being dictated by the incentive that the government is giving you. Okay, so basically, as a W-2 employee, except for, you have the standard deduction, maybe you can get the charity. There's not a lot of, the child care credit. Sometimes you can get like a student loan interest, mortgage interest. There's not a lot of deduction for a W-2 person. Where the big ticket or the big incentives are, or in job creators and real estate investors. I mean, that's really where it is. Okay? So, last question, then we're going to wrap this up. When should you begin to look at a CPA? When should you begin to start thinking, you know what? I think, I may have outgrown H&R Block. I think I may need a CPA. CPA stands for Certified Public Accountant. Accounting degree. Certain hours are required in terms of like experience. Then they have to pass a state test. So qualified. So when do you need an accountant? A couple of things to have down. If you're self-employed, so you're not a W-2 person, you're self-employed. You're a business owner. You own your own business. You need a CPA, and the reason that you need an expert strategist, right? Because as a self-employed business owner, you are eligible for a lot of things that employers are not. Okay, so for example, your retirement. You're eligible for a solo 401k, which employers are not. You can put away a lot of money in that solo 401k. So that's something that you think a little more expert help. You may be eligible for other business deductions, such as the home office deduction, right? If you work from home, So, you may need a CPA. If you have certain life-changing events, you may need a CPA, such as you're newly married, you're newly divorced, right? You may need a CPA because things may have changed, right? If you're going to buy a home, right, you may need a CPA because there's a lot of tax benefits from buying a home. If you have received an inheritance, maybe you inherited an IRA from a family member. How do you handle that? What are the tax implications? You may need a CPA. If you're moving to a different state, you may need a CPA, obviously because certain states have different laws. Okay. You own rental property. If you own rental property, you absolutely need a CPA. I mean, it gets complicated, but very beneficial in terms of taxes. So if you have rental property, you're definitely going to need a CPA to help you navigate the deduction, the depreciation. Absolutely, you will need a CPA. And if you have like foreign bank accounts or foreign investments, it can get a little complicated. Or also if you're an active stock trader. And let me just give you a quick example to explain. If you're an active stock trader, right? So you're not really holding your investment for a long time, which is what they call an investor. You hold investment for a long time. They call it you're an investor. You're a trader, meaning you're buying, you're selling, you're moving quickly. There's something called tax loss harvesting, right? Because obviously, if you buy low, the price goes up, you make money. But sometimes the opposite happens, right? You buy and the price drops. So you have lost what they call paper loss. You really haven't fully lost until you sell. But basically, your stocks have went down in value. And you could have a stock that went down in value, say $5,000 or $3,000, whatever. If you sell, you have quote unquote locked in those losses. So now you've lost, say, $3,000 from your investment. Those losses can be used to offset capital gains. So you have another stock that you made $3,000 on, and you've held it more than a year, so it's a long-term capital gain. The losses can be used to offset the gains from these stocks. It's called tax loss harvesting. Or the losses can be used to offset a gain on maybe a rental property you sold and you made capital gains. So when you have those issues, where there's implications in taxes, a CPA is going to be excellent. So again, guys, just a video to let you know that we need to look at taxes as another expense. And think about it. What other expense do we pay more than required, right? If our rent is $2,000, we don't pay $2,500. We don't overpay our bill. So why should we pay more in taxes than we need to? I know in the old days we used to think, only two things are, what did they say? Only two things are guaranteed in life, taxes and death. Death and taxes, right? But now we know that taxes can be modified depending on our actions. Are we taking the right action? Do we have a small business so we can get more tax deductions, or are we doing straight W-2? So again, guys, we're going to be doing more videos similar to this, looking at taxes in a different way, how we can benefit from the tax system, okay? Because whether we pay high or low taxes depends on the actions we are taking. I mean, Trump is not special. All these real estate, but they're not special, right? We're not cursed. They're not special. If we do the same action they do, we're gonna get the same results. Okay, so MD Investor with another video to increase our financial IQ, and I will see you again on the next one.